The pound hit the lowest level against the US dollar in 20 months, and the FTSE 250 slumped to a 2-year low. This after the UK Prime Minister Theresa May postponed a parliamentary vote on Brexit scheduled for Tuesday. She now plans to reopen negotiations with the EU to secure improved terms that can get through Parliament. Marc Ostwald is a global strategist at ADM ISI and joins me now to discuss. Marc, I could hear you sniggering over there. Presumably you think that her being able to renegotiate this deal is pretty much impossible.
Well, I think the EU have made their position very clear. The actual deal that's on the table is not going to be renegotiated. The EU has said that it's willing to facilitate anything which might get this voted through in Parliament, but the numbers that we're talking about in terms of purported numbers likely to vote against suggests that, is there anything that the EU can do to get this over the line? Above all, given, one of the major objections is to do with the backstop agreement for Northern Ireland, and no one's really come up with any sort of solution which isn't going to basically affect the union and will be unacceptable to a lot of people, not only Brexiteers.
So what's your prediction of what happens next?
I think we're at a situation where realistically there is no deal which is acceptable. There seem to be two options. We can sleepwalk into what I would call accidental hard Brexit, whereby this negotiation process, which after all, why should anything change between now and March the 29th when we've had so much time already? Or we get to the more radical solution of withdrawing Article 50, which could come in the case where people realise that, well, I think the backdrop to that needs to be explained. It's that the majority of people in Parliament, a vast majority, have no real interest in a hard Brexit. Therefore, at some point, someone either has to extend the Article 50 period, or it's unilaterally withdrawn.
So if we go for that second option, possibly extending Article 50, is that going to lead to another referendum? I think anyone trying to make predictions right now about what the political process is going to end up with is probably on a fool's gold chase. It's almost impossible to say. I think the only thing which is important in terms of the UK economy is, well, two things. First of all, the UK's reputation is in tatters, and it will take a long time to rebuild, whatever the outcome, even if Article 50 were withdrawn. Secondly, the economy will continue to suffer, and the longer this goes on, the more the economy is going to suffer. Yes, there are elements within that, for instance, the labour data that we had this morning, which were relatively speaking encouraging. We've got wage growth at an 8-year high, albeit not very strong, 3.3%. Employment is the best since records began in 1971. There is a slight upward creep to the claimant count rate, but it's not exactly hugely significant. But then the data that we had yesterday in terms of monthly GDP, barely growing. The manufacturing sector is clearly suffering quite sharply. The services sector is really only just about eking out a little bit of growth. And this could go on for quite some time. So we saw some very sharp declines in the pound yesterday and a bit of a bounce back today. It's up around 0.5% against the US dollar. How much of that is about the data and how much of it is about the politics?
I think, I don't know, the pound was already rallying a little bit before we had the data. It probably gives it a little bit of a fillip, because it is a positive relative to the negative that we had yesterday. I think the more important thing is the fact that we stopped at 125.05 on cable yesterday really does tell us about where the skew is in terms of people having protection via the options market. And I suspect that 125 level is a very, very heavily bought level in terms of people hedging.
So you think there's a lot of support there? You don't see us pushing below 125?
That I wouldn't say. There are obviously circumstances, particularly if we just look like we're in stasis and nothing's going to happen, and it's an accidental hard Brexit, then that's obviously not going to be a positive. But I think the risks, directional risk in terms of things, is much more to the upside if we get a
so-called positive outcome, rather than to the downside where people have been buying protection for a very, very long time. But it doesn't mean it's indefatigable. We saw this with the oil market the other week. Everyone was looking at $100, and then we've got this drift, and everyone was protected, including producers, down to $60. Suddenly we sliced through the level, and that's why a break of 125 would be very significant. And suddenly everyone's having to re-hedge their portfolios, and that's where the risk would be.
So does that same logic apply to the equity markets? Because traditionally the pound and the FTSE 100 are inversely correlated. So given the fact that we've seen a decline in the pound and the FTSE, that shows clearly that it's a risk-off move. So if we do get some positive developments going forward, do you see the FTSE 100 rallying as well?
Well, I think one would have to divide up between the FTSE 100, which is far more, it's jam-packed full of dollar earners. And the
250.
And the 250, which is much more to do with UK PLC.
Yeah.
I think the remarkable thing this year is, as much as the previous 18 months, you'd seen basically weakness in the pound being good for stocks. This year, that's not been the case. And I think that the truth of the matter here is, with the uncertainty that there is, as much as there are very cheap valuations of a lot of UK stocks, particularly foreign interest in the UK, until we get some clarity, is probably limited. If we do get some clarity and people know which way it's going, then they probably will start to go over what's come down a lot and actually represents quite good value in business terms. But as long as this goes on, I'm not sure that a weaker pound is necessarily good until we've got some real clarity on what's going to happen, what's going to emerge. And at the moment, that's a very, very thick fog.
So when it comes to markets and to businesses, what's the best outcome from Brexit that we should be hoping for?
Should be hoping for, well, that there is some form of a trade deal. And that said, of course, if we get some sort of an agreement now, this is only the exit deal. What the actual trade arrangements are going to be going forward might take anything between 3 and 5 years, if not more, to negotiate. So that creates some uncertainty in itself for businesses. Withdrawing Article 50 obviously is the ideal outcome, staying in the EU. I suppose a hard Brexit, whether it's accidental or intended, at least gives people the knowledge that this is, the UK is going to be trading on WTO terms. It'll take a long time, obviously, to them to negotiate bilateral agreements, but you'll probably get a revaluation downwards initially for the tough times that would be ahead in the case of hard Brexit. But then people will say, well, at least we know that. We've got that priced in fully, and we know now what sort of terms we're dealing on. The least ideal outcome is some sort of deal as we've got on the table at the moment, which then leads to another 3 to 5 years of negotiations, which doesn't really clarify how you're going to be operating as a business in the UK and how its relationship is going to be with its biggest trading partner, which is the EU.
And do you think there's a chance of fresh elections anytime soon?
Anything's possible. Sadly, all I'm seeing from the UK Parliament is a lot of people just trying to game the political system. It's possible, yes, but whether that actually resolves anything, because it doesn't. A fresh election doesn't actually resolve any of the things to do with the UK trade.
Yeah, Marc, thank you so much. That was Marc Ostwald, Global Strategist at ADM ISI. I'm Victoria Scholar. Thanks for watching IGTV, and we'll see you very soon.